Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this special weekday bonus episode of the Motor Trade Radio podcast. Today, we're delighted to welcome back friend of the pod, Robert Forrester, CEO of Vertu Motors. Robert joins us following the group's recent trading update for the financial year ending 28th of February. So there's plenty to chat about. Welcome back to the pod, Robert.
Good afternoon, both of you.
Seems like a decade ago, doesn't it? So
It
everything
does seem a
goes
long
on day by
time.
day at the minute.
Yeah.
Never a dull day, is it, Robert?
Never a dull day. No, I'm enjoying myself absolutely immensely. There's a lot to do.
Keeping you busy, yes, keeping you active. Yeah, I can well imagine. I mean, as Curtis said, thanks for coming back on, and obviously we've give you a shout out quite a few times, and we obviously try and cover many of your outputs and what's happening in your world on a regular basis. But let's get back to the most recent, as Curtis said there, with the trading update, which has already been picked up by a lot of interest across the sector of what you had to say about anticipating the adjusted profits before tax for the year ending significantly below current market expectations. And you're clear that much of this is driven by the ZEV mandate. Do you want to talk us through about what has impacted it, the margins, the profitability, and the sales across the group?
One of my favourite quotes of Ronald Reagan is just about the impact of government. Hello, I'm from the government and I'm here to help. Let's be honest, they're not helping. Pretty well everything we touch is impacted by the government to some degree.
Yeah.
So the biggest impact on motor retail, and I would say automotive generally in the UK, is the ZEV mandate. It was brought in not by this government. We need to remember that. It was brought in by the characters we had before. But it was always going to be a problem. And once you worked out what it was doing, it was obviously going to be a substantial problem. And the facts are as follows. One, the retail market was at its lowest level for 25 years in 2024. The industry sold less retail cars than during 2020 COVID year when we were frankly closed. The manufacturers have had to discount electric vehicles to such a major degree to get anywhere close to 22%. The SMMT estimate it's cost the manufacturers in excess of 4.5 billion. And that has caused immense damage to the financial performance of the manufacturers. In fairness, aided and abetted by similar policies in Europe, not as extreme as ours, but not helped, and that the EV market is very difficult across Europe. And obviously the way the China market is changing, which is significantly impacting the profitability of global manufacturers. So we have a situation where the manufacturers haven't got that much money and are really struggling actually to keep the market going, given it's the state forcing battery electric vehicles in. The upshot of which is, for retailers, reduced volume in the highest margin channel, retail, and the manufacturers not being able to push and support the retail network. So you've got increased costs coming in from the manufacturers. For example, stocking charges, depreciating battery electric vehicles. I think we depreciate some at 5% a month. And you put that up and new car profitability is under significant pressure across the sector. So you look at manufacturers, and we've got 34 manufacturers, and it's normally a portfolio. And when one goes up, another one drops, and it all works out. But this is a sector-wide impact that means everyone's off at the same time.
And I mean, you're urging that the government and the industry get together to address this. And I've got my own views on that in terms of areas that they're not focusing on. But what do you want to see from that? I mean, obviously you've got, strategies from the government, OEMs trying to reflect that. And in the middle of that, you've got retailers that are trying to, run their businesses. What are you wanting to see?
Well, I think we need to have a market-based economy in cars where customers decide what they want to buy based on the best available product and take into account price, rather than force a battery electric vehicle market that frankly is not naturally going to get to 100% by 2030. It isn't. The cars will get better, the range will get better, the economies might get better in terms of product reduction, cost reductions and gains of scale and stuff. This market is not going to get to 100% by 2030. If you force that in, you will end up with a very small new car market, and there will probably be significant failures in regards to some of the traditional European manufacturers, would be my prediction. So assuming you don't want economic Armageddon, then what you actually need to do is have a slower transition to net zero. And let's be honest, net zero is an interesting concept in itself, because actually, are these cars net zero? Clearly not, actually, given where the electricity comes from, but never mind.
We've got time for that one, Robert.
Yeah. But, you know, I think giving the industry a chance to get there using market economics and to actually create jobs and have innovation, rather than a very, very punitive fining regime that basically puts the state in charge of what people can buy. That's what it's doing. That is no way forward, and ultimately will not be allowed to happen. But I think we might have some painful years while we educate the government on basic economics.
As you say, the end goal is how we get there. It's not necessarily, to your point, the end goal. It's 2030, 2035, the net zero, whether it is absolute net zero. It's this transition. It's the journey to that point.
Yeah, and I think the Europeans have put this stuff in place, but a lot more moderately. They've got 2035, not 2030. And despite the fact I'm an ardent Brexiteer, we have to accept the fact we are in an integrated European car market. You know, it isn't a British car market, it's a European car market, which actually forms part of a global car market. And we seem to think we're a sort of, nothing that happens outside has any impact. Well, it does.
And I mean, just briefly, just whilst we're talking about your financial update, after sales, I think you did a call out that is actually performing really well at the minute with everything else that's going on.
The bottom line is that we saw a reduction in new car gross profit in retail for the reasons I've outlined. We actually saw an improvement in fleet, as you'd expect, because we're big in fleet and the market and fleet's been up. I would say there's more pressure on fleet in terms of margin than there has been of late, which is something to watch. But on used cars and after sales, we were substantially up. I mean, I did actually go into some detail on used cars because there are some very interesting things happening in used cars for me. We had clearly a very troubled market back end of 2023, which sort of spilled over into January 24, where we saw used values come down, and that significantly hit sector margins. Everyone's aware of that. It's very clear. However, I was expecting this year to see much more stability in trade values, if not trade values going up, because as the new car market came down, you would expect supply to tighten and therefore values go up. We've seen that. The auctions at the moment are very strong. Actually, our profits in trade are very strong. What we didn't see was retail prices going up to the same degree as trade. So we have seen a degree of margin compression across the piece, albeit probably more margin compression when you've got that 12-month-old car that's competing against a very aggressive new car offer, especially on finance. So margins expanded compared to the prior year, but did not expand to the extent to which I thought they would. So we did flag that. And there are some franchises where people are actually struggling to get gross profits of a sensible level because of this margin compression. Now, I would think you'd say what changed? Well, the budget, I don't think, did the consumer any favours. And I think did take the shine off the consumer. And it doesn't take much in the used car market, you know, percentage-wise, if consumers just back off to impact retail pricing. So I think retailers are nervous about pushing the prices up because they'll lose volume. And I think that is not changing currently.
And Robert, just picking up on that point about the budget, because effectively, and this does kind of go back to what you were saying about Ronald Reagan. We did have this double whammy last year with the ZEV mandate. First year, we had the autumn budget. I just wonder what effect the autumn budget had on you as a business, as an employer.
I think it's had multiple effects. I don't think that everyone focuses on the tax rises, but actually she didn't fundamentally change the trajectory of government debt, which continues to go up. And I think, and I don't quite know the answer on this, but we were envisaging in 2025 2 interest rate cuts of probably 0.25 each. 6 months ago, we were envisaging 4 interest rate cuts. So the speed of interest rate cuts in our heads are probably weaker because the government has got some significant debt to fund. The converse is, the economy is going to go into recession and we'll have to cut interest rates steeply. I'm sort of not fully bought into that argument, if I'm honest. So I think interest rates going down slower than people envisaged, which I think has happened post-budget, means that, interest rates on your debt and overdrafts stay higher, interest stocking charges stay higher, the affordability of used car loans, new car loans probably stay higher than they were. So that's generally a negative compared to where we might have been. The second element is it knocked the confidence of the consumer generally, because I don't think there was a British business that said this was a good budget. And I did actually, there were some business cheerleaders prior to the election who were very positive about a future Labour government, and they changed their tunes quite quickly when they actually realised the impact on their businesses. So the mood music's been poor. And actually GDP growth is anemic to nil, and GDP per capita is actually going down. So you've got a pretty poor economic backdrop. Then you come to the specifics of business taxation, which was the national insurance changes, which were not anticipated and were quite punitive. Combine that with the increase in the national minimum wage yet again, and it cost Vertu Motors PLC from April £10 million a year, and every other British business that employs people £10 million a year. So if you want to come up with something to reduce future employment and future profits, this is what you would do, and that is what they have done. And you've seen headlines across the piece about what the impact of that is. We were quite open in the statement last week. We have looked at the business. We have looked at the cost base. We have taken a couple of businesses where if costs continue to go up, the break-even point gets to a position where you might not find that viable. So we have closed a couple of dealerships, and we have taken actions in terms of reducing headcount, which we've never really had to do in the history of the company. During COVID a bit, but we have taken some job roles out. We've closed on Sundays pretty well across the board, and that has led us also to get some efficiencies with regards to headcount. I don't take any great pride in taking headcount out. It's not quite what I'm in business to do. Much prefer creating jobs, but we had to make savings because we will not, as a business, thrive if we reduce our profits by 10 million due to those tax increases and minimum wage increases. So we've dealt with that. That's passed, and I think we did it as best we could.
And just as a follow-up to that, how big an impact do you foresee the Sunday closings having across the business?
Well, we haven't sold any less cars.
Yeah.
And actually, we trialled it in 50% of the Ford division about 18 months ago, and they didn't sell any less cars. So we knew where we were going. The other issue is your sales team stability increases quite considerably because people like not working on Sundays.
Exactly.
Gives everybody a mental break. So I think the combination of no impact on sales and greater stability in sales teams is well worth having. And also you need less management to cover, because we were having management in place partly to cover Sundays. So I'm actually very positive about that, and I think it makes a lot of sense. Strange, isn't it, that we have these big multi-million-pound dealerships and we close them on Sundays, but you have to look at the decisions we've got to make.
Definitely. We'll have more from Robert after the break.
listening to all the chatter that matters on a special weekday episode of Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising.
I mean, Robert, briefly in the trading update, you talk about the shares being mispriced and trading at a material discount. I mean, why is it? Which is why I think you've announced a share buyback program. I mean, what's the thinking behind this, and what do you hope to achieve? Because some listeners may not understand.
Yeah, I mean, it's very simple. If I go and buy a business this afternoon and I buy it for net assets, then I'm paying 100% of the tangible assets, net assets of that business, no goodwill. If I buy shares in Vertu Motors PLC, I will be buying them back at this afternoon 53p. And if you add up our tangible net assets, so that's all the assets of the company, excluding goodwill, take off debt, it's probably about 73p. So I'm buying at a massive discount to what the company, even ignoring goodwill, is worth.
Asset value.
Yeah. So that makes a major difference, actually, in terms of what it does is reduce it. We actually buy the shares, we cancel them. So I don't pay dividends on them going forward. And the profits that we make, and let's be honest, Vertu Motors is still very profitable, get shared out amongst the remaining shareholders. So your earnings per share actually goes up. And the shareholders, to a man, are highly supportive of such a strategy. It doesn't mean we won't buy new dealerships, but it means we are rebalancing a little bit, because actually the right decision at this current moment is to buy more shares back.
Yeah, makes a lot of sense, that answer, to be fair.
And Robert, as we close in on the end of your financial year and the beginning of the March plate change, what are your thoughts on how the March market will perform based on activity you're seeing across the group at the moment?
Well, I think it's dependent on manufacturer, but actually I think because the retail market was that weak last year for a variety of reasons around the ZEV mandate, there's probably quite a lot of pent-up demand in new cars. So I think the March market could be quite strong relative to where it was last year. And I think we should be relatively positive about that, to be honest with you. That will also help bring in some nice part exchanges, which will then help used cars. So I think we should be relatively positive about that. The two negatives, I would say, generally are the ZEV mandate has not changed, it's just got worse. So if people struggle to hit those electric vehicle targets last year at 22, then they're going to really struggle at 28. Has the consumer really changed its mind on BEV? Not yet. Have we got the £18,000 new battery electric vehicles, which would be so critical? They're starting to come, but they're not really here. So I think that will put some pressure on manufacturers. Manufacturers having pressure is not a good thing for us, because it affects their ability to stimulate the market and also pay bonuses, etc. So I think that's why we're cautious on the outlook, and also the economic outlook generally, I think, is quite poor. I'm not optimistic that the growth policies of the government are going to lead to growth. So I'll be fairly negative on that point, and I think that's going to put some pressure on the consumer. Will we see unemployment increase? Probably. Is the used car market quite highly correlated to the unemployment numbers? Has been in the past. And then we have to wait and see what happens with interest rates.
Yeah, God, and very, very interesting points. I might share something with you later, Robert, on some of that. Talking about headlines, and there's been some nice headline grabbing this week, obviously in the media, about the Land Rover sites in Exeter and Truro that were targeted by what you themed as eco-terrorists.
Yeah, it was yesterday morning, actually.
Do you want to talk us through what happened and what damage was done?
Yeah, well, it looks like three, well, in the words of the terrorists themselves, let's be honest, three dealerships, two Vertu ones, which is Truro and Exeter Land Rover, and I believe Land Rover in Bristol, were targeted at around 3 a.m. By a well-organised gang who decided to put a power drill through the tyres of every one of our cars that were on the forecourt. So that could be customers' cars, it could be used car stock. And then they decided to post a video of this act on Twitter. And let's be honest, there are people in the world that add value, get up in the morning, go to work hard, serve customers, earn money and pay tax. And there are some people who don't.
Yes, I can imagine which category they fall into, Robert. So it was clearly an act of terrorism to the eco-terrorists.
Yeah, it was in their own words. It was to punish businesses for selling SUVs that apparently kill.
Punish. After what we've been talking about with your finances and the ZEV mandate. Yeah.
And that, it massively helps, doesn't it? That's really going to help society. It's changed my mind on environmental matters, obviously. You just think, what possible rationale is there for that? And there's some very strange people about. The country is full of some very strange people. Anyway, we'll get on with it.
Yeah, exactly.
We will now buy 300 tyres.
I'm going to say, that's it. Yeah. Insurance are happy. You spend some more money on tyres.
Yeah, we'll buy 300 tyres using petroleum to make the tyres.
And 300 tyres go into landfill.
Yeah, so we'll hit our parts target on tyres, won't we?
But, Robert,
this isn't very good, is it?
No,
this is not. And this is the second time Exeter's been hit, actually.
Oh, is it?
Yeah, Exeter was hit about 6 months ago. Quite similarly, or this time they actually the last time they actually put pamphlets on all the cars explaining why they were doing it.
This thought I'd let you know.
Well, that was helpful.
An explanation.
But we'll just have to get on with it, and I won't get too upset about it because the world has always been full of idiots, and now we've identified a few more.
Yeah, you've got a few things more to focus your attention on at the minute, haven't you, to be fair, if nothing else. I mean, huge thank you, Robert, and I know it's a busy time for you, especially when you do any kind of trading update, and appreciate you giving your time, and it's always great to have you on, you know that, and as I always say, you're always welcome back on any time to share your views on all things automotive as we get to. So appreciate the time, and thanks for taking the time out today. It's been a pleasure as always.
Well, thank you for inviting me.
Thanks, Robert. Well, that's all for now. Many thanks for joining us for this special bonus episode of Motor Trade Radio, powered by Motors. We're back this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.